Rahul Sharma that's up next. So let's get straight to him. He's the head of technicals and derivatives at JM Financial Services. Rahul, welcome to the show and greetings of the season to you and your entire team at JM Financial. Do you think this market is headed lower? For now, at least the 18,200 level is being held on the downside. But do you think it's a matter of time before it gets taken out? And what's the slightly medium-term strategy over the next couple of months on the Nifty chart looking like?
Yeah, so the important data to keep an eye on today is the put-call ratio. The options positioning has become extremely bearish, extremely pessimistic. So the Nifty put-call ratio is trading at 0.69, down 32%. The Bank Nifty put-call ratio is at 0.53, which is down around 42%. Now, if historical data is anything to go by, the data is screaming buy. But given the global situation, we have dealt such scenarios in the past. We've seen a lethal second wave, we've seen a third wave, which was not so lethal, and markets came out relatively unscathed. I think this is a good opportunity to keep an eye on levels. Now, 3-point mantra, number one, avoid the COVID sensitives. It could swing both ways, whether you are right or wrong. Data from China is pretty much not so reliable, so it could swing on the other side as well. So avoid chasing COVID sensitives. Second is keep an eye on levels. Nifty 18,130 and 17,900. These are the two important technical support levels to add longs in this volatility and have a positional view where we believe this is still a buy on dip market and these corrections are to be utilized as buying opportunities. Mantra 3, avoid leverage positions until and unless 18,500 is not reclaimed. So I think these are the three key levels to keep an eye on. Once 18,500 is navigated safely, we can very well come back to leverage positions and the aggression can go up. But otherwise, I think it's best to be a buy on dip kind of an investor, keeping these levels in mind. And we still believe that this is the medium-term outlook of the market is still positive. We could very well see the Nifty heading northwards, possibly in a few weeks' time.
All right, Rahul, that is sane advice coming in. So just watch out for levels and then take your trades accordingly. You said that one has to avoid COVID sensitives. Where would you put pharmaceuticals in that list? Because while we're seeing diagnostics move today, you can call that a COVID sensitive, but a couple of these pharmaceutical stocks are actually buzzing around, and COVID, sort of fears have only given it some tailwind. So case in point, Glenmark Pharma, Ekta spoke about them actually launching a drug which has to do with diabetes. So it's got fundamental news. Volumes are picking up. Would you say that on the charts, pharmaceutical stocks are looking attractive, or maybe just avoid these as well?
Yeah, so Magalam, stock-specific activity can continue in pharmaceutical names, but broadly as a sector, I would stay away from it, primarily going by the hint, going by the input that the rising COVID cases could be a positive. In fact, a lot of APIs come to India from China, so I don't think so how it will be beneficial if the local situation in China is not so great. So it's best to stay away from that sector. In fact, some of these sectors which are relatively much better, I would focus my eyes on the PSE index, on private banks, as well as cement to a great extent. I think these are sectors which are relatively not so affected by what is happening at a global level, and we would stick our neck out and say be ready with your cash to deploy at lower levels in some of these names. And pharma sector, I think it's best avoided given what the kind of performance that we saw the last time we had a scary situation domestically as far as COVID was concerned.
Okay, hi Rahul. Things are swinging around actually. We pulled back 100 points. In the last 10 minutes, we've given up half of that. We're up close to around 50 points in the day's low. But you're clear, keep allocating money, and you believe that this is in buy on dips mode. When does that get nullified? What is the stop loss you're looking at on the downside? That will make you change this view?
Yeah, so as far as levels are concerned, I think 17,900 is a good level to go fishing. If the view has to get negated, technically the setup will get disrupted if 17,500 on the Nifty gets broken. Unless and until that happens, we still believe that this is we saw almost like a 2,200 point kind of a rally. This is just a pullback which we are continuing. So as a stop loss, I think as an exit strategy, 17,500 should be a good level. If it closes below that, the view gets negated. Until unless we can continue with the buy on dip strategy.
Hearing your thoughts, Rahul. Thanks so much for stopping by. Markets are in a bit of panic mode. We wanted some kind of levels, and you joined us and you obliged. Thank you so much. Wishing you a good evening, and in case we don't speak till Christmas, wishing you a Merry Christmas as well.
Wish you the same.
Well, on that note, though, we'll slip into a short break. But as always, on the other side, our technical experts will be back with us. We'll also be joined by Alpha Manager of the Day, Rona Konkar of PPFA's Mutual Fund will be joining in.